As you know, we have a fantastic yes, that's right, live conference coming up, Empowered Investor Live, and that is in Orlando, September 10th, 11th, and 12th. We start Friday with a property tour, then all day Saturday and Sunday we have the conference. Saturday evening we have a band, some entertainment, some fun, and I am very excited to announce my buddy George Gammon will be speaking there. And George, welcome. What are you going to be talking about?
There's a lot we could talk about. It's a very interesting world we live in right now, isn't it?
There's no shortage of news nowadays, is there?
Insane news, that's right. But I think for real estate investors, especially people who understand the value of 30-year fixed rate debt, the main thing that they should be, or one of the things that I would suggest they really understand is the probability that we see inflation long term. And so you hear a lot of debate out there as to whether or not we see deflation outright, inflation, disinflation, or whether inflation itself is transitory or something more permanent like we saw in the 1970s. And if I'm a real estate investor leveraging properties, positive cash flowing properties with 30-year fixed rate debt, this is something that I want to educate myself on. In other words, what are the variables that go into the United States seeing these types of inflation outcomes in the future? So that boils down to the dollar, right? So it's supply and demand. How many dollars are circulating in the real economy chasing goods and services? And then what is the supply of those goods and services in relationship to the demand the additional dollars are creating? So we've got to think through what happens to the balance sheet or the amount of dollars on the balance sheet of what I call non-bank entities in the real economy. So that's just average Joe, Jane, small businesses, mid-sized businesses, corporations, etc. That's what we really have to focus on. So in the past, the dollars were created by the commercial banking system, really lending them into existence. So if you took out a mortgage for $500,000, then that would be new money that did not exist before, new dollars, probably better said, that did not exist before. We've moved into a hybrid system where now the government with their deficit spending that is monetized by the Fed is really contributing, let's say, to the amount of dollars
contributing, you use
is
loosely,
a nice
right?
word.
Yeah.
That's a nice word, right?
Right.
To the amount of dollars that are circulating. So now we've moved from an economic question to a political question. Like how much are we going to get gridlock from the Republicans, the Democrats within the Democratic Party? Is there going to be some sort of gridlock, or are we going to go from a $4 trillion stimulus package to a 10 trillion to a 20 trillion? What are the probabilities there? Because that
we're going to infinity and beyond.
I believe so, yeah. But that determines, how many of those dollars are getting out there, and then therefore the probability of inflation, disinflation, deflation, temporary inflation, permanent inflation, et cetera. And then I think there's a third option that we might move into in the future, and this is what I want to discuss all this really with the people who will attend. But the third option is the central bank digital currency, and that's where the Fed now takes control over the amount of dollars that are circulating in the system. So they look around and say, well, wait a minute here. We're the central bank, but we're not central to anything. People think we control the dollar, but we don't.
They want to control it a lot more than they do.
That's right. So they can control the rate of inflation. So why do they want to control the rate of inflation? Because they need to bail out your drunk, insolvent Uncle Sam.
Yep.
It's like you always say, you've been saying this for years and you're right on the money, that for a real estate investor, you want to align your interests with the government. Unfortunately, as bad as that is to say,
right.
At least when it comes to the devaluation of the dollar. And you look around and your drunk, insolvent Uncle Sam is the largest debtor in human history. Therefore, to be bailed out, to get that debt to GDP down from 130 or 140% down to something that's more manageable, say 75%, they need a 1970s
right.
stagflation or inflation at least, and I think it'll lead to stagflation. But the only way that we can have a high probability of that outcome is if the Fed takes control of the dollar, therefore a central bank digital currency. So what I want to do with the people who attend is go through these three different systems of creating dollars, and then give them the tools necessary so they can figure out what they think the probabilities are that we get one of those 4 or 5 outcomes, and then they can set up their portfolio in accordance to what they think the highest probability outcome will be. And when I say set up their portfolio, I'm not just talking about taking out 30-year fixed rate debt, but what's your LTV on that? Some people might want to, if they think there's a 90% probability that we have a central bank digital currency and long-term stagflation, they may want a higher LTV than someone that thinks there is a possibility that we see some sort of disinflation while we see these inflationary spikes.
Right. So adjust your loan to value ratio based on how you see this playing out, right?
Correct. Yeah. And then one of the things that I'll try to drive home through showing them the data is what I believe now and in the future, real estate investors need to understand that the property is now actually the liability on the balance sheet, and the 30-year fixed rate debt is actually the asset.
Yeah, it's counterintuitive.
Very counterintuitive.
Yeah,
very counterintuitive. But people need to get their mind. Yeah, they need to get their head around it, but they need to understand why. Mm-hmm. And understanding why will help the investors that attend this conference make better decisions moving forward.
Yeah, good stuff. And George, everybody can register at empoweredinvestor.com. Just go to empoweredinvestor.com, get your tickets. A whole bunch of other people already have. We're going to have a great time. People love our events. I was looking back and trying to calculate the number of events I've held over the many years, including mastermind retreats, which are smaller retreat style events, maybe 20, 25 people, and big conferences with hundreds of people. I think we're up to about 130, 140 events.
Wow.
So we've done this a lot, and you used to be in the event business, I know, in your prior life. We know how to make it fun, deliver a lot of value for people. These are times that, more than ever in the last 18 years since I've been helping investors invest nationwide, this is the time where you really got to be paying attention more than ever.
That's right.
And, at the same time, there's a lot of crazy and I'd say bad stuff happening. There's a lot of opportunity at the same time. And just look at what all these institutional now rental firms are doing, like American Homes for Rent and all the big private equity and hedge fund groups. I mean, they are capitalizing on this, aren't they, George?
They are. But there's some unprecedented things going on. I mean, we're seeing home prices go through the roof, but we're seeing rents do the same thing.
Yeah.
And usually there's a counterbalance there, right? If home prices get too high, then people favor rent, and then you'll see kind of the home prices soften a little bit. And it's the same thing when rents get too high, then home ownership looks more attractive, and then they'll put a little headwind on the rent. But we're just seeing, whether it's home prices or rental prices, we're just seeing them go up, 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 and up. And that's a very weird dynamic. And I think people need to understand the macroeconomic influences as to why we're seeing that dynamic. So again, they can set up their portfolio in a strategic manner to take advantage of that.
Good stuff. Good stuff. Well, sounds good. George, I have one other question for you. On Saturday night when we have the band, are we going to see you on the dance floor?
Well,
how many of you want to see George Gammon dancing?
Only if it's salsa. I did that TV show in Medellin, and that was one of the episodes we did. That's kind of the comedic relief of the episode, is when I went and took a dance lesson, a salsa lesson.
So you say you're a better economist.
I don't know if I could be worse. I couldn't be a worse dancer. So when you compare my dancing skills to anything, I'm going to be better at anything else than dancing. That's for sure.
I bet he's being overly modest there, folks.
I'm actually not.
Fair enough. Well, hey, we're really looking forward to your talk at Empowered Investor Live. It was great being with you at your conference, Rebel Capitalist Live. I was a speaker there, and that was several months ago. That was a lot of fun. You've got another one of those coming up in Houston, I believe, in January, right?
Yep, January 7th through the 9th.
Good stuff. Well, good stuff. Well, hey, we'll look forward to seeing you in Orlando, Florida, September 10th, 11th, and 12th. Empoweredinvestor.com for your tickets. And George, thanks for joining us for this special announcement.
No problem, buddy. Look forward to seeing you in Orlando.